Hey guys, and welcome to the Working Money channel. Peter Schiff here, I think with his best attempt at trolling crypto Twitter. It's not looking good, hodlers. You guys need to hope Bitcoin can hold 60,000. Otherwise, it's a long way down. All the hardcore Bitcoiners are used to big drops, but the newbies who now own ETFs are in for a rude awakening. I didn't even think about it this way. I mean, we've been in the crypto community, or at least some of us have, I guess, for at least one crypto cycle. If you're new to the crypto community, though, welcome. And be aware that cryptocurrency is volatile if you haven't figured that out already. He's bringing up the Bitcoin chart here, and it is, it's not looking great in terms of the short-term view. Bitcoin is now currently trading at around $63,400 per coin. You guys can see that in there. We haven't really maintained momentum from late last week. We started climbing up. However, Bitcoin was not able to retain new highs, so that is not looking promising. Again, at least for the short term, this does not mean that is it for the bull market, guys. We got to really differentiate between the macro view and shorter time frames. So Bitcoin right now trading at 63,400 again. This all-time high is at 73,000, and we are still nowhere near the top of this cycle. And the halving just recently happened. The post-halving slump is certainly something we need to be paying attention to as well. Like I've stated in the past, this post-halving slump generally does take us down, or can take us down for a while. Back in May of 2020, which was the last time Bitcoin did halve before a week ago, we did see that Bitcoin slump in and around here. It was May 10th. We did see Bitcoin go down in price, and we did continue to see Bitcoin really kind of move down from this level up here for another 73 days. So again, guys, it's only been a week. At that point, Bitcoin did regain some momentum before slumping back down, and then it wasn't until how many days post-halving that we really started taking off? 151 days before this parabolic shift. Now, is that going to happen this time? I don't know. Are we going to see this trend take a longer time, play out quicker? These are all things yet to be determined. What I do notice, though, are trends on the chart. And so, to be paying attention to what has happened in the past is a good rule of thumb, at least, to give us some kind of a navigation map as to where we could see ourselves in the coming weeks and months. So crypto sentiment is now back down neutral at 60. So we climbed up a little bit to 65 the other day. Now we're back at 60. The market cap is at 2.34 trillion. So that's down a little bit. There has been a bit of a sell-off in the market as indicated by the Bitcoin price. The volume is up. People are selling off 16.27%. Bitcoin dominance is down a little bit, 53.5%, but nothing too dramatic. As you guys can see, a sea of red today in the market. But remember, short-term pain, long-term gain. This one from Mags, the 4 phases of an altcoin bull market. So if you guys are holding altcoins and wondering what the heck should I do? Well, accumulation, this is where price bottoms out after a long bear market. Prices consolidate and break the downtrend during this period. Then there's the first leg up, guys. Here prices begin to surge, but many retail investors fail to recognize the trend change, leading them to stay on the sidelines. Then we chop sideways. After the first leg up, prices often move sideways, entering a choppy phase. You can also call it a reaccumulation phase after the first leg up, commonly observed after the Bitcoin halving. So we are in that phase right now. After the Bitcoin halving, we are, well, I guess we're right at the beginning of it. Are we going to chop sideways? Again, this is Bitcoin. Let me bring up the altcoin market here. Total 2. I'll bring up total 2. In fact, we could see something like this for a while and move down slightly before that new uptick. And then, guys, pure euphoria, up only. This is where most of the money is made in a very short period of time. Bitcoin, altcoins, and meme coins, everything goes parabolic during this phase, and this is the most exciting phase of the crypto cycle. If you pay attention to the chart, the first 3 phases typically progress slowly and can be somewhat boring at times, but the real profits are made by positioning oneself at these initial phases. Impatient individuals who chase after red and green candles are likely to get caught out during the first 3 phases. The final phase, crypto dominates the news, attracting new money, and both Bitcoin and altcoins reach new all-time highs. So I think I'm going to send this to a friend of mine who just got into cryptocurrency about a month ago, got all in, full life savings kind of thing. And she's been asking me, oh, what do I do next? And why is this, the halving just happened? And I don't know what to, this is what to expect. Anyway, let's keep moving along, guys. I'm sure you heard about the Hedera HBAR news the other day. Can't believe the amount of FUD we had go through today. This one coming from Nick Crypto Crusader. The Hedera community deserves better. I seriously don't understand why there is so much hate around HBAR. HBAR is a great project. But there was some news yesterday, some fake news which misrepresented a BlackRock announcement. A widely misinterpreted announcement from the HBAR Foundation has sparked confusion among crypto influencers and sent the price of HBAR soaring. So for those of you guys who were under a rock yesterday, maybe just weren't looking at your phone, this is what happened to HBAR. HBAR soared on the news yesterday, did go up, but it was already up a little bit. It was almost up 100%, guys. Now, as you can see, it is coming back down. But what had happened, shares of a BlackRock market fund have been tokenized on the Hedera blockchain, sending Hedera up 96% in the last 24 hours. But this was misinterpreted by the HBAR Foundation in an ex-post. An organization working with the Hedera community shared that blockchain trading and infrastructure firms Archax and Onera have tokenized BlackRock ICS US Treasury funds on their network. So it sounds as though they were giving the what was happening. Literally, it made it sound like they were partnering with BlackRock or that HBAR was a partner of BlackRock. The video shared with the announcement seemed to suggest that Onera, Archax, and BlackRock were partnered on the venture, and HBAR claimed it was bringing the world's largest asset manager on chain. So I don't know how much of this was purposely done. This is the tweet, a screen grab at least of the tweet, retweeted out by Mason from the HBAR Foundation. But as we now know, it has been cleared up, and no, BlackRock had to come out, clear it up. HBAR is not, in fact, directly partnered with BlackRock. But I mean, the FUD and the hate towards the HBAR community, I don't really understand it. Nick Crypto Crusader here posting this. Hey, Cointelegraph, maybe you should do a reassessment on who you have working for your company. Just take a look at this post regarding HBAR holders that got posted by one of your unbiased reporters. How can you have someone like this working for your company, or let alone report on accurate news? The entire Hedera ecosystem deserves better. The sad part is that this isn't even the journalist that wrote the HBAR hit piece. Seems like Cointelegraph has a lot of bad actors working with them. Very, very sad. He was reposting Tom Mitchell-Hill's tweet. Good morning to everyone except desperate Hedera bag holders. So, I mean, for no reason, just kind of trolling the HBAR community. Don't understand why. I mean, these hack journalists, they, I guess, have some kind of MO, modus operandi, as to who they want to take down. I mean, it happens in the XRP community all the time. We know that this is nothing new. So why would they do this? Maybe HBAR is another one of those cryptocurrencies that they see as being a threat to, I don't know, OG cryptos, Bitcoin, proof of work. I don't know. You get trash like this, unfortunately. But guys, the good news, the silver lining, I guess, is that we did get an interesting update with regards to Archax. Now, we know Archax also famously came out saying that tokenizing trillions of dollars, I don't remember the exact figure, but that they could one day see trillions of dollars token on the XRP ledger. I recently did a video on that. I'll see if I can find it, and I will link it up here in the top right-hand corner. So David Liu posting this. You have to watch this after the HBAR news. I wanted to find out more about Archax, and these dudes really understand the what's what. They are completely in line with what is going on. I'm going to play you guys a short clip from this video, and I'll link the rest in the description. I'm not going to play the full thing. Watch this.
Digital asset trading is going to explode.
The digital asset trading future has the ability to completely disrupt trading. All assets in the future could be traded between individuals, between entities.
At the moment, digital assets are largely been focused on currencies. But I think going forward, there's lots of different ways in which digital assets can be monetized.
Once you accept that most assets around the world can be tokenized, you start seeing the adoption in everyday walk of life activities. You realize that there is something big happening here.
The digital asset space has really matured in the last 12 months, and proof of that is a person like myself coming from the hedge fund industry, taking an interest in the space and thinking, how do we get involved?
The reason that institutions are not so involved in crypto trading at the moment is the lack of transparency within the marketplace.
They need to see processes and systems which either are regulated or act as if they are, and are really, really robust on their technology, their custody, and the way they perform, particularly with regard to compliance.
If the crypto market became regulated, institutional investors would flock towards it. The size of the market is massive. and their clients feel that they need to get a share of this.
Archax is aiming to be a top-tier, regulated, institutional-focused digital asset exchange that differentiates itself from the current players by being purely focused on institutions and their clients.
We want to be a respected institutional-grade player that is headquartered in the City of London. And we want to build an exchange and have a custody solution that is institutional-grade and segregated, where institutions and accredited investors feel comfortable buying and selling digital currencies.
Archax is a team of credible financial individuals that have worked in a regulated environment their whole career.
The vision for Archax is to bring the traditional trading experience into the digital asset / crypto world.
Okay, and I'm going to leave it there. There's about just about another minute 15 on that clip. Again, guys, I'll link it in the description of the video, basically pointing out how much Archax really understands this emerging economy, a new digital asset class, namely cryptocurrencies, also have a connection to the XRP ledgers. So again, if you guys didn't catch that video that I did recently put up in the top right-hand corner, I do suggest you watch it, all part and parcel to where this market is moving. Now, Michael Branch, guys, posted this. With regards to Ripple's stablecoin, are they really going to be using USDT? Ripple has now shifted to USDT for US operations amid regulatory pressure. So Ripple replaces XRP with USDT in US operations following an SEC ruling. Ripple has shifted its US on-demand liquidity operations to Tether instead of XRP following a court decision related to US securities laws. This legal judgment was disclosed in Ripple's opposition to the SEC's proposed penalties and final judgment. In response to the court's decision, Monica Long, Ripple's president, announced the switch to USDT for all US-based ODL services. Crypto Addy publicized this change on social media. Long stressed the importance of using legally approved stablecoins for future transactions within the US. The company has reoriented its strategy towards its Singapore subsidiaries, which now manage most of the new XRP sales contracts for ODL customers, primarily outside the United States. This move is part of Ripple's strategy to bypass US regulatory constraints while continuing to support its international operations. So I was a little taken aback by the use of USDT. There's been a lot of controversy surrounding Tether. Even Real DGen here saying, why USDT and not USDC? Brad is seen as very chummy with Jeremy Allaire in several circumstances. Is Ripple likely to be able to use its own stablecoin in the United States? This is not part of the penalty phase in the SEC versus Ripple lawsuit, so what gives? Well, look at what's going on with USDT around the world. I just wanted to show you guys this clip from 707 Crypto on Twitter. Listen to this.
Now, reports say that the U.S. sanctions have made it more difficult for Venezuela to increase its oil output and exports. Now, this is because American companies now have to wait for individual authorizations to do business with Venezuela. To counter these sanctions, Venezuela's state-run oil company began accepting payments through digital currencies just last year. And one of these cryptocurrencies is called USDT, or Tether, which is designed to maintain a stable value as it's pegged to the US dollar. Now, the return of US sanctions is speeding up the reliance on cryptocurrency as Caracas rushes to reduce the risk of payments getting frozen in foreign bank accounts. Reports say Venezuela's state-run oil company has moved to a new contract model where it demands prepayment for half of each cargo's value in the Tether cryptocurrency. Caracas also wants new customers to purchase oil using cryptocurrency from a digital wallet. This requirement has been enforced on even some old contracts as well. Now, despite the sanctions, Venezuela's exports reached some 900,000 barrels per day just last month, the highest in 4 years. The global oil market usually transacts in US dollars, but Venezuela is making the shift to cryptocurrency, bypassing the global oil trade order, which relies on the American currency.
Now, in Tether's defense, they did come out and say, this was a Cointelegraph article that I read. I don't have the tab up here, but they did come out and say that we will, if we see that anybody is trying to bypass sanctions, any of these countries trying to bypass U.S. sanctions, that we will shut off their account. I don't know how legitimate that claim is, but alas, that is what Tether has come out and said. Now, in terms of Ripple using Tether, let's dig into this further. Crypto Addy here, a rare question for me to Joel Katz. Can you help me understand? Eric Van Miltenberg in the Digital Frontiers article interview explained for some of the payment corridors within its network, Ripple had been using stablecoins. Okay, but he also said that the Ripple stablecoin will be good for the XRP ledger because he compares it to stablecoins introduced to other blockchains like Polygon. This is more of a question with regards to utility on the XRP ledger. She doesn't follow, though, as per this point here. So blockchains like Polygon that have increased the level of total value locked on chain. So what's locked up? The Ripple stablecoin is backed 1-to-1 to the US dollar, short-term US government treasuries, and other cash equivalents. According to the announcement, though, her question, okay, are some of those cash equivalents going to be the digital asset XRP held by Ripple? And if not, why compare it to the TVL? So another interesting question here. Don't know if David Schwartz, 7 hours ago, he did respond here. So he does say currently there's not really any native way to lock up assets on the XRP ledger. What I think Eric was talking about was how having high-quality stablecoins has driven usage of other blockchains as measured by the increase in value locked. On the XRP ledger, you'd expect to see people using stablecoins as a way to hold money when they don't want to hold a cryptocurrency as an asset for AMMs to use in addition to XRP, and also as a way of increasing the general usability and functionality of the XRP ledger and so on. Broadly, I think the point is basically just that high-quality stablecoins make blockchains more interesting and useful. So nothing that really has to do with the USDT story here. That said, there has been some more controversy with regards to Ripple's ODL, and Bill Morgan notices something else. Judge Torres got the ODL part of the summary judgment decision so wrong it is hard to explain. She no doubt understood the contracts, but how can she find that holding tokens for the few seconds to effect a payment is an investment contract of money, or that there is an expectation of profits from the investment? Did Judge Torres understand the problems ODL and the use of XRP as a bridge currency in ODL transactions is meant to solve? Seems she didn't understand and just lumped ODL sales with all other sales to institutional investors without any explanation of why sales to ODL customers fall within the same category as sales to institutional buyers. So, just kind of touching on this, Sherry here, if Judge Torres rules on a permanent injunction on the ODL, I am out. The damage it could cause to Ripple's business is a risk, and I don't want to wave through. Sure, they can potentially sustain the business outside the US, but it's not a gamble I want to play. Going back to this concept of doing business in the US, perhaps using a different stable coin, and maybe this is why Ripple has shifted gears a little bit. Bill Morgan says you ought to be concerned. Those saying it doesn't matter because XRP itself has clarity are underestimating the adverse consequences for XRP and the XRPL ecosystem of a broad permanent injunction that stops Ripple's ODL or stops use of XRP in ODL. Moon Lambo did come out and say, President Monica Long, Ripple's president there, says they don't have any ODL customers. According to Ripple's latest filing, a Singaporean subsidiary has ODL customers using XRP, but Ripple itself does not. Would an injunction to stop Ripple's ODL apply to Singaporean subsidiaries? If not, then as far as I can tell, a worst case scenario here is ODL will continue to be used in any corridor so long as it doesn't touch the United States. So I don't know, putting people's fears at ease, maybe a little bit. I don't know. Bill saying, I think there were subsidiaries referred to in the complaint, but that is a good point, Matt. I don't know the answer. A wide injunction is going to push at least some ODL customers away from XRP now that they know they can choose other assets in ODL such as USDT. So maybe that was the point that this original article was making here. You can use USDT on the XRP ledger. Well, I mean, you can use anything over the XRP ledger. I guess for the United States, all it has to be is regulated, clear, and compliant. So again, some thoughts about this. Michael Branch also bringing this up. The U.S. government may favor Ripple's stablecoin for domestic transactions. David Schwartz did chime in once again. He discusses the new Ripple stablecoin, and here's what Schwartz had to say. So just in a nutshell, guys, Ripple's new stablecoin will operate on the XRPL and Ethereum networks. The U.S. government may favor Ripple stablecoin for domestic transactions specifically, and Ripple aims to balance XRP and stablecoin use in cross-border payments. Now, again, I will link this in the description if you guys want to read the full thing. I do have this tweet thread up here, originally from T's Crypto Spot. So someone explain this to me because I'm not 100% certain, but the original XRP payments model was fiat to XRP to fiat, right? Now that there's a Ripple stablecoin, does that mean that it's XRPL absent of coin, fiat to fiat, no bridge necessary for converting USD into recipients' money? Is this basically Ripple now saying for US to international payments, we don't need the use of the XRP token anymore, and we won't need it for a conversion of USD into a recipient's native currency? Explain it to me like I'm a toddler because I'm not the sharpest sometimes, he says. So, guys, David Schwartz did come out explaining this exactly. The idea is to get people using payment software that can settle with XRP. So, by no means is Ripple trying to cannibalize XRP. By no means are they trying to replace it in any way, shape, or form. But there needs now to be a bit of a workaround, as far as I can see here. A workaround that can help users maybe figure out what they need before they get onto XRP. I think that step was too broad. You got to remember, when we look at these concepts, you know, we've been studying this kind of, well, at least I have for at least 6 years now. So a lot of us know a lot more than, well, definitely a lot more than the average Joe, but also a lot more than the average banker, believe it or not. So getting people to use the software, then there's no reason for them not to settle with XRP when it works the best. It would be kind of silly to try to get people to use a solution if it's inferior. David Schwartz goes on to say down here, where XRP works best, we don't want any barriers to people using it and getting the best experience. Where XRP does not work best, we don't want people using it just to make us happy and suffering an inferior experience or worse economics. So there you guys have it. Tease Crypto Spot here, you know, saying there was some sarcasm in that post. I don't know if there was or not. It was very hard to detect. It did go undetected nonetheless. Thank you for breaking it down. So there you guys have it. David Schwartz explaining why this is now the new course of action for Ripple, for XRP. Ripple possibly using USDT in markets where that is regulated, but definitely using other cryptocurrencies where it makes most sense. The end goal, guys, is XRP adoption, and even though an XRP is trading just shy of 52 cents today, it's not the end of the world. Let's wait for this market to rally before we see some new highs. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.